Hey there, everybody. Thomas with Basecamp Trading. It is Monday, June 17th, and we are going to take a look at another mistakes traders make video here, and we're going to talk about what's going on with crude oil, and we're going to talk about one mistake that traders make, which is getting chopped up and trading in an unattractive market environment. So what happens a lot of times is people will see something like a compression pattern. Okay, they'll see a market forming a wedge or a pennant or a channel, and they'll say, okay, great, it's in the channel. And what they do is they start to trade inside of this channel, and they start assuming that it's going to break out and try to pick which way it's going to go. Okay, it's going to break down, or okay, it's going to go break up. So they start buying or selling while that market is still inside compression. Now, before we move further into why this is a big mistake, make sure you hit that like button and click the subscribe button if you haven't already done so. So with that being said, why is this a mistake? Why is trading inside of compression, trying to anticipate a breakout taking place, a bad idea a lot of times? Well, the reason is, when do markets chop? When do markets move sideways? They move sideways in compression. When do people get chopped up? They get chopped up in sideways markets when we don't get any follow through. So if you think about how a market actually moves, we go through periods of expansion, like over here, and then compression here, and then expansion here, and then compression there, and expansion here. And when do we make the money? Well, we make the most money as long as we're trading a directional strategy, meaning we're not trading something like a spread. We make the most money when the market's in expansion. When the most people get chopped up, they get chopped up in compression. So what do we want to do as a trader? We want to start trading more in expansion. So when we see a market in compression, in a pennant, in a wedge, in a channel, something like that, we want to just sit on our hands and be patient and wait for that market to signal. And once it signals by breaking out, then we have directional bias, and then we can start saying, okay, we're looking to go long, or okay, we're looking to go short. And that is how you can avoid that big mistake that a lot of people make, which is trading inside there, getting chopped up, and then missing the move because they've already hit their maximum loss by the time it actually does trigger and follow through. All right. Once again, don't forget to hit that like button if you're enjoying these videos. I'll see you in the next one. And until next time, everybody, happy trading.